Hi everyone. Following a fall on Wall Street last Friday, Asian stock markets were mostly down in the Asian session. Hot inflation is declining rather slowly. At the same time, top central banks are likely to undertake new aggressive rate hikes. Apart from that, the risk of a global recession is quite high. This is why optimism in stock markets is rapidly waning. Investors who pinned hopes on a slowdown in monetary tightening had to face the brutal truth. Last Thursday, St. Louis Fed President James Bullard said that the key rate might be hiked to 5.7%. At first, speculators took Bullard's remarks with a pinch of salt. However, the hawkish comments of another Fed policymaker made them change their mind. On Friday, Boston Fed President Susan Collins said that restoring price stability remains the current imperative, and it's clear that there is more work to do. Fed Chair Jerome Powell warned about this in October. Price stability implies a drop in inflation to the 2% target. It means that the key rates may remain high for a long period of time. Moreover, one of the three key inflation indicators for the Fed signaled further growth. This is the ISM Non-Manufacturing PMI, which accounts for more than a quarter of the consumer price index. If prices for essential goods and houses declined, the cost of services from healthcare to auto insurance rose sharply. They are also projected to climb higher. In October, the non-manufacturing PMI index grew to 70.7 for the first time in 6 months. Hence, the Fed is still unable to rein in inflation. For this reason, it is sure to stick to aggressive tightening. Today, the U.S. stock figures are trading with modest gains. This trading week will be shorter in the U.S. on the occasion of the holidays. Investors will hardly be willing to buy risky assets. If so, it will be extremely bullish for the U.S. dollar. Last week, the U.S. dollar's net positioning turned short for the first time since July 2021, following inflation data. The euro and pound sterling reached multi-month highs against the US dollar. However, the US dollar index jumped above 107 amid the hawkish comments of Fed policymakers. It approached a weekly high of 107.6. It also up today thanks to rising US government bond yields. In the Asian session, it was steadily moving into the upper border of the range 106.9–107.6. Looking back, the 2022 year turned out to be quite successful for the greenback. It soared to new highs thanks to the rapidly recovering economy, monetary tightening, and geopolitical woes. So a drop in long positions could indicate that investors are summing up the results of the year. The yen weakened due to the growing US dollar and US treasuries. In Japan, the core inflation surged to a 40-year high in October. Bank of Japan Governor Haruhiko Kuroda confirmed once again that the regulator would stick to an ultra-soft stance to support economic growth. Given that the Fed remains strongly committed to aggressive tightening, the Bank of Japan's dovish approach exerts pressure on the yen. At the start of the Asian session, the dollar-yen pair remained almost unchanged, hovering at 140. However, later it slid from the range of 140.2, 140.1 to 140.1. Judging by the technical indicators, the support levels are located at 139.9 and 136.9. The resistance levels are seen at 141.2 and 143.3. If the pair falls to consolidate above 141.2, it may facilitate further decline. The Aussie remains extremely vulnerable to changes in the US currency and the US Treasury yields. Besides, China will hardly ease quarantine restrictions given an increase in the death toll. For Australia, it means a decrease in demand for its commodities. However, sanctions against Russia boosted Australia's trade balance in 2022. Apparently, the country's economy is doing really well. As soon as the Fed takes a pause in tightening, the Aussie could resume a steady upward movement. However, this is a long-term prospect. The RBA meeting is scheduled for December 6. The regulator is likely to raise the interest rate by only 25 basis points. Therefore, the Australian dollar is highly likely to slide down. In the Asian session, the Aussie dropped to 0.6629, fluctuating in the price corridor of 0.6623, 0.6686. It logged the fourth intraday fall in a row, moving away from a two-month high of 0.6798. The Fed's monetary policy decisions continue to impact global markets. On Wednesday, the central bank will unveil its meeting minutes. Apart from that, the US, Japan, Germany, France, and Australia will publish their PMI indices. Hit the subscribe button and stay up to date with the latest market news. See you!